sellers at 5,937.5.
Good morning, traders. Could I please get a screen and audio check in YouTube in the Discord Trader Lab? How we do it in YouTube? Are we in YouTube? Can I get a check in YouTube?
We have sellers at 5,933.75.
Thanks, Nick. All right, well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. Let's get into it. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room, but if we get into real time, we'll talk. We have a lot to go over today. Also, this stream is about integrating Bookmap order flow tools with auction market theory, using a volume profile as a chassis to overlay structured trades on. The Trader Lab community is a group of like-minded traders who come together to leverage their collective experience. It's about the business of trading, understanding what this business actually is, and potentially creating a sustainable business using a business model that applies to the trading business. It's quite different than what most retail or developing retail traders think it is. And in Trader Lab, it's about trade plans, only engaging when you have a statistical edge or a probability of an outcome that favors you, and then accepting that we're in a 100% random environment where there is no certainty. Now, that may be contrary to what you believe. In other words, that you can create certainty and predictability and confirmation. But I'm going to suggest it doesn't exist in this business. And if you want to find out why, use the link in the bottom of YouTube. There is no cost to become part of the community of the Trader Lab. Take advantage of all the other additional education. Now let's get back to it. Ooh, who's that? Okay. Higher time frame, guys, as of, well, it's not current, but it's earlier this morning. What do we know? This is Investor RT, and this is my higher time frame chart. And it allows you to really slice and dice the market up. And what I like to do is, I am not a rigid individual. One thing about, when you learn processes, we all start out with this idea of rules. It's got to be this, it's got to be that. And so we follow when we get educated. And it's almost like riding a bike, if you can remember. You'd ride a bike and maybe you'd have training wheels, and then the wheels come off, but you're very careful and very deliberate. And then you get into the flow. And when you're in the flow, it's seamless, or driving a car or anything else. So there is no right or wrong way. It's how you need to break this up so you understand what it says. Volume profile, auction market theory is really how the market works. So what does it tell us right here? Well, this is a consolidation. You'll see we had outside edge here. We went up and tested our objective. This was a target. And all of these are in previous streams that are posted up on YouTube if you're inclined. Then we took the stops out from there and from there. And at that point, and I thought this was the outside edge, We had this day, and then the shorts got squeezed. I was looking, and this was on Thursday, for continuation up somewhere to squeeze some more shorts. Well, instead, we opened under this key level, under 32, and did the Acapulco cliff dive down to this outside edge of this full consolidation. Now, I call these fractals, and think of it like Russian dolls. They're inside of each other. but they're all the same behavior. So this is a trend configuration. We have now rejected this. So all the fuel or stops that are under here, take the market down. And then what's under here? Same. So what happens? This is Friday. This is Monday. We get some short covering. In fact, yesterday's short was at the overnight or ETH volume point of control. So it's a beautiful trade. And when things, not everything is random, but the auction is all about levels of behavior, and you can learn this. And what happened yesterday? These yellow lines, this one here, and this is yesterday, another trend day. And our target for me was under this low to clear the stops out under there and under there. Now, how far you come down in here, part of the magic. Who knows? Then this yellow line is the highest price or volume from this day. What is this yellow line all about? Well, if this is too high, it's retail price, high volume, and this is too high from this morning, then this is the next target. And if we get lower, we have a gap at 2175. So those are my targets. All this is in Trader Lab, and and it doesn't mean you have to be on shorts. I would think, though, that being aligned with the advancing side and not joining the retreating side gives you more edge. Now, in Trader Lab, this is about structured trading. So it's about only getting involved where you're in alignment with the market. Now, other traders in Trader Lab are going to trade counter trend. They're going to go long, short. That fits the fractal time frame. But I suggest, and again, it doesn't mean you need to do this or even should do it. I suggest that you look at this business with patience, with intentionality, and being very, very, the word's not coming to my mind, unfortunately, but really be very discerning about where you interact, because there's going to be an edge, and then there's going to be no edges, or very kind of like coin tosses. I think if you're going to do a coin toss, you sit at a slot machine. If you're going to be a trader, you want to wait for edges or locations that give you potential based on the research you've done in the Trader Lab. Because if you're in the Trader Lab, you already know where the trades are before they show up. That's what having a trade plan is about. Now, this is the ETH, and it's right before the RTH open. This is Central Standard Time, where I currently am at the moment. This is a sweep. Now, you're going to notice, by the way, I hope this is a little less noisy for you. I made all these icons smaller just to try to make it a little neater. You'll let me know if they're too small and you can't read them, and I'll adjust them. Now, this is yesterday's volume point of control. Remember, I just showed you that yellow location. So this is an area to observe that might be too high. So, and we have the sweeps here. So this is suggesting to me that we might, underline, come up in this area, and don't forget, I'm still in the ETH, and potentially test this and reject it and go down. So for me, all I have going on is shorts. That's as deep as this gets. Hold on one second. I got to make an adjustment to something here. One moment. Okay, and if you have questions, by the way, guys, please post them in the chats, whether you're in YouTube or the Bookmap Discord community. And if you're visiting, okay, Tapish, have a good one. And if you're visiting, please give a like if you're in YouTube. Okay, buy sweeps. What do we anticipate with sweeps? Well, we don't know what's going to happen, part of the thrill. But the possibility is counter rotation. So right here, I am looking for a short to potentially come down, take out yesterday's low, and continue lower. So this is the first thing I'm looking for. Now, looking and getting are always different. So market opens. Now we're at RTH open. RTH open is here. We have a high probability of checking this and potentially out here. So this is where my first trade is setting up, and I'm looking for a short. I have a short trigger right here against this volume and this sweep. Now, this is a very aggressive trade, and I always want to repeat this for everybody, that the open is a separate trade plan. You have very little, you have no structure really to lean on. So you're really kind of in the dark, and it's very aggressive. And for developing traders, this is where you learn narration, because this is fast and it forces you to develop unconscious competence. To be able to trade this, you have to already know when you see this that you have a trigger, and the test is going to be here. Now, and the micro high volume is right here. Let me show you this trade. Now, I took this trade, and like everything else, it is random. So I take it, and whatever happens, happens. Part of the thrill. So now, and I'm going to draw these. I always have to say this. I'm not doing this all the time, because what I do is I'm really looking at the shape of this. What this is showing you is we swept the book, and the sellers are here and the buyers are here. So right here is a micro consolidation. The high volume is sitting right there. That's a high volume node. So right here is a consolidation. It's a micro auction. If the sellers take control and I come back and check here, this is my entry. My stop is 3 ticks over here, and I'm looking to get risk neutral. Let's see what happens. Let's watch. So I get risk neutral. Okay, first trade. Let's look at the structure. And then I'm going to go on, but it's a good place to start. So what do we have? A downtrend. What might make sense? No longs. Now, again, you can take a long. I'm not saying you can't, and you will have profitable trades if you take counter trend trades. However, what happened to me over many years, and this is going back, of course, since I started in 1980 trading, I've been through this a little bit. And what happens to me is if I take counter trend trades, I may have a shorter range opportunity. And I also risk that somebody's going to drop an anvil on my face, because there's other traders who are looking to dump inventory who will use the counter trends for continuation trades. Do I want to be the guy who's in the counterattack, push the advancing army back, or do I want to wait for the counterattack to join the advancing side? Me, I've been in too many counter trend trades in a trend configuration early on in my career where I would pick up what I consider change and miss the bigger move. So what I do is I skip those unless, let's just say, other parameters I have fit. But for the Trader Lab, this is a structured trade. So, and it's an advanced one. So this is not where you start again. So this is a short. This is a short. I take my short here. I put my stop 3 ticks over there. Better would be here, but it doesn't have to come back there. This is a short. This is a short under here. It's about a 3-point risk. If you can handle 3-point stop, or you can waltz in here a little better, here you're going to miss more trades, but you'll have less risk. Up to you. Risk neutral. Now it's holding, and I got yesterday's low. Remember, that was my target. Now, and I get taken out. Okay? C'est la guerre, right? So that's my first trade. No problem. And, I got taken out. Is that a problem? No, it's not. Why? Because I'm just going to get short from another level. I have a high probability of taking out the ETH low, over 90% probability. We could take out the ETH high. Hey, but we have to get over the ETH volume point of control, which was also a short. Back to it, we had, I forget, I think we had, can't remember now. We had trades in ETH. I think I posted those in Trader Lab. It seems like a long time ago. I start trading very early in the morning. By early, I mean 5:30, 6 a.m. Okay, so this is too high. So if I come outside, which is what this is, now I have my developing volume point of control here. What is a developing volume point of control? At the moment, this is the highest volume in the developing RTH. So, and of course, the first trade was down, and now I'm rotating across the range. So now I have to look. This was my first location, and now where to? You know, that's part of the thrill. Oh no. So let's look. So I still want to get short. So I don't know where that's going to happen. Let's look again. Again, this is advanced processes. And this is not anything you should be thinking about. So I know when I come outside, what's happening potentially is the shorts in this leg and existing shorts that are in here from yesterday, and since we're inside the range, can get squeezed. And I have no idea where to, of course, right? You didn't think I knew, right? Because I don't. I'm very proud of not knowing. And the reason I know I don't know is I have to be in a place where I have a completely open mind and I do not close off the possibilities. Let's come back to microstructure. So what's my plan? Well, sometimes I have to ask myself, is the context changing? Well, there's no doubt in my mind, unless it changes, let's leave it that way, that the trend is down. We can agree. So if the trend is down, how do I trade a downtrend? There's only one way to trade it for me, and that is outside in or mean reversion trading. And this is something you can learn in Trader Lab. Let me make sure everything is still percolating here. If you got questions, please post them. So I am now looking for other shorts. So here, now I don't know, like everybody else, or maybe not everybody else, but everybody I know who's in the business, we don't know where the market's going, except now I think this is my next location. Okay, this is a statistical probability to come back here and reject it. My next short is here. Didn't get there. So if I find too high, this is where the target would be. So my next trade was going to be here to there. So let's see what happens. VPOC migration. Now, notice how resistance becomes support. This is why, another reason why I do this. I got to mark this, by the way, variable high volume node. This location here that I'm going to mark is also a target coming back. So let's just watch what happens. Now there's a couple more pieces here. If this is the retail price in the developing time frame and we leave it, so now there's more volume here than there was there, that might be suggesting this is too low. That's why I label it. Now this shifts higher, saying that the retail price might be higher. So again, I'm looking for this. So I'm sitting here going, right? And I got support there. So now the market goes up and I'm going, come on, because this is a nice trade. If I can get short here, I can scale here, go here, and I'm still looking to come out the bottom. That's because the trend is down. Now, right here, I see short triggers here, and I see short trigger here. So for a structured trade, there's no trade. If you can read this, you can trade it. And where's our support? Potentially down here. So if you could take a short here, you'd be looking for this. And again, I might have posted this one in Trader Lab, but I don't remember. So let's watch. So we're in two-sided trade. Where was it too high? Let's come back to the structure. Let's do the same process. Now, I don't know right here that it's not going higher. In fact, it could still go higher. Remember, knowing is not part of trading. And if you think you know, good luck with that, because you're going to be busy trying to be right, where our business is not about being right. It's about trading where you have an edge. And then whatever happens, happens. So what is our location here? This is our micro high volume structure, and we fell away from it. So where the sellers took over was really here and there. So it's pretty much right here. So let's look at this and see what it does. It's right there where you see the seller, and then we broke and we tested. So it's these sellers right here. So that location for a short, now I have something to lean on. I had nothing here. I was going, right? Looking higher. Well, if I find my seller, then when it retraces, I got something to lean on. If I'm trying to pick this out here, you know. But once I break under here and I retrace, now I'm looking at outside in for the continuation. I'm just saying, okay? So this is a short in the Trader Lab. Let's look at it. VPOC migration, too high. Variable high volume node. Think support and resistance. It happens in all time frames and fractals. So what I'm trying to show you guys is how the market prices. What's too high, what's too low? Well, now we know that's too high, which we didn't know. There's your sellers. Well, okay. Now we counter rotate. My resistance is here. My sellers show up again. Another leg down. So this is a short, and then you're going here and out the bottom or wherever it goes. You know, it's kind of the joy. ETH low is next target. We have stops under here, and this is a gap. So this is another target over here. So that's the short. So 2 trades so far. And then it's trade management. That's up to you, you know. So if you're in Trader Lab, you know, the whole idea is not that you are whirling dervish, but that you wait for trades to give you an edge. The gap, to fill the gap, is here. This is a target. It looks like that's the low of the day. Stops are under here. I call that fuel. Why are stops other lows of previous days that we left behind? Because there's going to be longs with stops under there, and that creates fuel. And this is a gap. So let's see how the market plays. VPOC migration. So what do we know? Too high, follow the process. I think I'm going to get caught up. There aren't that many trades. Only good ones, huh? Hey, by the way, if you take a stop, is that all right? How do you feel about that? I'm using the term feel. Very important. How do you feel? Are you narrating the market? As I suggest all the time in Trader Lab, if you're in Trader Lab, you should be recording with OBS software, live narration. And if you take a trade, you want to go back and then you want to review specifically your narration so you know you're reading it. I don't use indicators, and what I'm doing really is reading this. So I am the indicator because this is input, this is language, and instead of using a math-based derivative to try to determine, yeah, it's going down now, I can see it here in order flow. That's the edge that order flow can give you, because I can get in here with a 2.5 to 3 point stop, and I can read the change in behavior. So right here, this is too high. Notice where we come. It's also VWAP. We have a structured trade in Trader Lab called VWAP to VPOC. Now let's look at the location. It is right here. I'm going to draw a little line just to keep us consistent. So that's resistance. This is the new current price right here. It's called VPOC migration. I did a webinar on it. You can watch it. It's in the library in the Trader Lab. This is too high. And I got VWAP short to there, and then wherever, So, and these are structured trades. So let's watch. Now, this is a sweep. And when I see a sweep and I'm at a gap fill and there's going to be stops right in here, this is an area to observe. This says get out of Dodge. Let me show it to you. Now, when you see sweeps, you never know what's going to happen. Of course. Let's look. So I have multiple sweeps going on in here. Sell sweep says counter rotation up. Buy sweep, sell sweep up. Buy sweep says down. More sell sweeps. So, and again, location. Now, the fact we're here is not a long for me. It is always trade management and alignment. So here I'm having my sweeps, my resistance. Let's go now into the minutia a little bit. This is your retail price. And if I come back to it, it's mean reversion. So, and I don't know where that's going to happen. I'm going to show you a little trade management concept, and you have to bet these for yourself. Alan, if you're in the Discord, you might want to say hi. Let me know you're in there. Alan's been doing some good work on researching trailing stops, which is really all time frame dependent. So this here is a consolidation. It looks like that. And we auctioned it. Too high, too low, and we break away. That means the sellers are in control. They are in control here. We break away. Too high. Fractals. We're over here. We break away. Too high. I'm going to draw the box over here for you. And all I'm doing is outlining this. So you can kind of see, because it's a consolidation. And this is for trade management. Let's look at the structure. Notice this aligns with the low volume node. Notice I have a sell sweep, which suggests potential for counter rotation. Notice I come up here and I have a buy sweep, which suggests a downward rotation. So far, as long as I'm under where the sellers took control, I'm okay for being short, okay? Depending, and again, it depends how far you're going to keep your stop away. If you're more micro-oriented, you could be using this, and then even this. And then when you come out above any of this, you could be out. That's a function of your time frame. Or in this, there's no time, so it's fractal. So this says down, okay? And then, watch. We take out our, you'll see, this is our resistance, this and this. Once you come up here, if your stop is up here, you're going to get taken out, okay? And then the trade's over. Are you guys with me? That's a way you might manage your trade. Now we're current. Where are we? Mid, sweep. So we got to watch this behavior here. Variable high volume node. It was too high. This might give us a rotation down here. We've got to watch. It's not a trade recommendation. Do you have questions, by the way, guys? Post them. So this is a potential short mean reversion trade. And it's a bit aggressive naturally, but then everything's a bit aggressive. Are you guys tracking? We doing okay over here? If you have questions, post them. I'll do my best. Now remember, why are we looking at shorts? Now we filled the gap within a tick or something. So the downside might be over. Here's where the gap was, down here. 21.75. And then we have, so that's the high of these candles here. And then we gapped out of there and, off we went and did our thing. And now we are returning here. So inside we have targets down here. Our major targets, 58.64, not necessarily for today, whenever or never, right? And then down here, 58, whatever it is. So this is a target. So there, and then there, and then there. Okay? And those are on the price map. And as we go along on our merry path here of trading, those are important in a higher time frame. This is microstructure suggesting a counter rotation. That's all it is. Now, the trade, if we have a trade, the location, the key location is here. Outside edge, low volume node. Let me mark it. So we're going to look out there, and I'll explain why. And it doesn't mean these are not trade recommendations. Everybody takes stops, so we have to get over there, right? And we have to get over responding to emotional or stimulus, fight and flight, and the lunatic. You really need to get detached. This is too high. There's our sweep. This is our resistance. We can come out here and squeeze and then potentially return here. This is the same trade, but it's at a different location. So there's two possibilities. You take this short to there. You need to get risk neutral. If we push through here, the next location is out here to observe. So I got two possibilities. This, hold on. That's kind of weird. 1 second. One moment, guys. Getting a little... 103.
Sweep ES sellers at 5,958.75.
Try to just adjust something here that's a little out of whack. See if I can get it in whack.
Sweep ES sellers at 5,957.5.
Okay. Sorry about that. So our resistance is under here where the sellers took over. So this is a short, okay? But this is an aggressive trade. In other words, I might take this trade. You probably shouldn't take this trade because, and this is a location that we can trigger on in the Trader Lab because the language of the auction is that this might be too high. That's why we left it. So if you want to think about how this thing works, or at least how the market might work, this was the retail price. And there's more volume down here is suggesting that this is where the fair price is. If we return to a price that was previously too high, right there, then we can test it. I get my sweep, and that sets up this. Now, whatever it does, right? Are you guys following? This is a Trader Lab trade, but you have to vet it. And it doesn't mean anything. We'll either take a stop, get a scale, get to the target, or none of the above. Are you guys with me? Hope it makes sense. And I hope you're getting something from this and all the work we do in Trader Lab, which is to help traders create sustainability in the business. How we doing so far? Um, Sebastian, I'm not sure we had a VWAP. I don't know where that was, but if we did, I covered it. So this is a short. Now, the thing to understand, and this is a structured trade in Trader Lab, um, and you don't have to take this trade, right? You have to study it, and you need to understand why. One of the things that I have found, and I've gone down every path everybody else has, is that I didn't understand the business I was trying to be in. I thought it was get confirmation and, and try to work towards more certainty, right? And it was all because of our primal wiring. Think about the decisions you make in this business that have nothing to do with the business, but it has to do with your experience outside, in the outside world. And it has to do with your primal wiring to avoid the saber-toothed tiger. We're not even conscious of the decisions we make here that have nothing to do with the actual business. So we're going to try to fit and I always want to cover this because most developing retail traders have no idea, and they never get the idea because they're going to persist on a path that might be a dysfunctional path in this business. And the thing that's a problem is we have winning trades. And I mean, the problem of winning trades is everybody has winning trades. So the belief is that because we're risk adverse, if we could get more confirmation and more certainty, we would do better, right? I think it's logical, but it has nothing to do, again, with this business. So we're trying to fit other elements into a business that does not, those elements don't have any place here. But it's what we know and what our comfort is and what our reptilian brain is driving us towards. So we think that's what this is. But you're in a gaming business. Casinos have no certainty, right? Because they don't control the cards out of the deck or how gamblers play the cards. How can we control how the other participants trade? We can't. We're in a gaming business. So if you're going to play a game, you need only to play where you have an edge. That's it. So how do you get an edge? Well, you got to vet structured trades, and I share 60 PDFs of these and a library of webinars. There's a link in the bottom of YouTube. If you're visiting, there's no cost. And there's the Trader Lab community. And it takes a community, really, to do all the work. The work is research, sharing ideas, creating new structured trades, vetting them, statistical probabilities, which is really a big part of trading, in my opinion. Now, this is the target for this short. Primary target is here, the mean, and then back here and maybe further, but maybe not. So there and then there. Now, for me, and it's not a recommendation because you may think, well, gee, Tom, it's going to go to zero. Yeah, it might. But in the meantime, as trading the auction, what I know is I know where too high is, maybe, and it doesn't mean we won't take it out. It's just at the moment, it's too high. This distribution is an auction. It's a consolidation, and the high volume is right there in alignment with what was too high before. Resistance. I can sell resistance and either take a stop or try to come back to this price, which is the current retail price. The market tends to come back in all fractals and time frames to high volume. So think Russian dolls. Let me bring you back to the concept. Higher time frame. What was that? High volume. What about this? High volume. What about Down here, high volume. What about here? High volume, high volume, high volume. Oh, that's too high. I'm out of here. High volume, target. See, and this was taken before this morning. And then this is the gap fill, which was a other target. Now, the market may only rotate now because it's kind of done its thing. And now you're going to have both sides. It's going to slosh. So for me, unless things dramatically change, my trade is to take a short here, get risk neutral, keep my stop 3 ticks above here, and I might move it down, and then go for this and that. That's the trade. Now, either it works or it doesn't work. Right? And it's not any deeper than that, guys. It really isn't. It's random. And you should take a note. You should write this down. The business is not predictive. It is random. So the only thing we can do is understand how the market works and wait for locations to potentially interact. In the Trader Lab, this is a structured trade. And it doesn't mean, again, that we're not going to come outside. Remember, the next layer is out here. So I know if I take this out, then I can look up in this area and see if I get mean reversion. So I have 2 locations to trade. I got this one, and I got another one up here, up there. So that's all I need to do right now. So risk neutral, stops over here, and it's also the mid. There's going to be stops up here. So there's a pretty good chance we're going to come back over this. And that would be a scratch if there's no trade management. Okay? So let's see how this one works. In the meantime, let me look at your questions if you have any. And thanks for visiting Trader Lab. Appreciate you stopping by. Perfect pair. The thing about context and trade plan, it's a priority of inputs. So in the time frame you are trading, we are day traders. So we're trading inside of a trend. And as long as we're in a trending configuration and we're not in balance, then there's only one way to trade if you want to be in alignment with the dominant side. And for developing traders, you need to get that part down before you could think about counter-trend trading, because you'll put yourself out of the business. I think I started to tell you early on I would trade both sides. I had no clue. And now don't forget, a lot of the times the market's not trending either. But if one side takes control, I will trade with that side that takes control, whether it's a trend day or it's just a rotation, a directional move. And then if we get into two-sided trade, until it changes, I'm going to stay with the dominant side for continuation trades. And the only way I have found, I was going to tell you the kind of the moral of the story. You take a counter trend trade, but suppose this is the short that takes out this low and keeps going. Do I want to be long? Well, I'm going to say me. I'm only talking about me. So in the past, what would happen to me, I would take those counter trend trades. And I'd find myself getting not a lot for the risk versus waiting for the continuation. I was not good at being long, seeing the reversal and flipping to a short, over here. I just wasn't good at it because I'd be focused on managing the long, not about the reversal. So I found for me, if I can align with one side, I have a better chance of waiting for the trade and mentally really concentrating here for the entry versus concentrating on, my stop goes here and what is this, and now it breaks here. Well, now I'm thinking about my long. I'm not thinking about my short. So, but that was many years ago. But let's say for developing traders, what do you think the better plan is? Trying to pick the bottom of anything or waiting for continuation trades that are mean reversion? because in the Trader Lab, if the trend is down, then it's outside in trading, mean reversion, shorts only, unless it changes. And at the moment, not yet. For me. Are you guys have questions? Does this make sense? Yeah, travel value. I have no idea. I don't trade pairs, and I don't know. You can go to knowledge base or at bookmap.com or just shoot a ticket into support. I'm sure they can answer you. Thanks for the question. Thanks for visiting the trailer. Dudesman is asking me what qualifies a level as high volume. It's in relationship to what's around it. This is micro high volume. What happened up in here is a micro structure, but it is the highest volume in this consolidation. If I draw, all I'm doing is bracketing the low volume nodes and the high volume. I should say I'm bracketing the high volume, but let's look where it is. If you look to the right, you see that little low volume node? It's right there. So in here was an auction. And there's my sweep, which sets up the short also. So I've got a confluence of behavior at a VHVN. Don't forget location, location, location. This is a structured trade if it's vetted. Now, where's the high volume? Well, I got that, which is the high, had 5,000 contracts. So there's high volume. And in this little micro thing, I'm inside. This is a fractal. So this little high volume that's aligned with that higher volume this is a fractal. So this little thing is inside of that. That's a fractal. That's high volume. If the high volume, think shopping, if this is too high, then this is the current price. If I come up to a previous location and I find too high, and it happens to be the mid, who knew, then back here. But the key to any trade is getting risk neutral. So depending where you enter, you would be risk neutral. Your stop stays up here, and either you're going to get squeezed out, which, don't know, and this is your resistance. So that's high volume for me. And then what's the other part of high volume? This high volume has 5,000 contracts. If it's too high, I'm going to revert back to the developing volume point and control, which has 10,000 contracts. So too high, I'm out of here. Let's come back. Or because it's the mid and it's not my favorite place to trade because there's going to be a ton of stops up here, I'm going to get taken out. So it's either there or there. Now the trade's on. I'm risk neutral if I'm depending on my trade plan. And now I just wear a helmet and let the trade ferment. Dudesman, did I answer your question about what qualifies a level as high volume? See, there's think fractals, Russian dolls. All of this behavior is inside of itself. So if you think of a fractal, this is what a fractal is. It's micro, very micro time frame, and it tells a story. Auction market theory is really how does the market work? Well, the market's trying to figure out what's a fair price and what's unfair. Right now, that's the fair price. So that's a target. Because what does the market tend to do? It comes back to these prices. So that's why this is a short. I'm still in mean reversion. Outside in trading. Outside in trading. Now, if I get taken out, this is really my outside edge up in here. It's out there. That's a low volume node. What that suggests is if you go up in time frames, you think of it, or fractal, there's a low volume node. So this whole thing, and this is the volume for the whole day right here, is a consolidation. Inside of that consolidation is this one, fractal, Russian dolls. So if I find too high here, that's aligned with too high there, and I know I could still squeeze and come out here, which would be my next short, by the way, if it sets up, I already know where my next trades are. Why? I have a trade plan. I'm not making it up. Why would I do that? I mean, if I'm going to play a video game, I'll put one on. Or if I'm going to gamble, I'll go to a casino and be sure to get the ticket to the buffet. In the meantime, this is a structured trade in the Trader Lab. We're trying to go here. Let's see if it works. Now, why might it work, you're going to ask, right? Because this is auction market theory. Most traders are depending on indicators. And by the way, I don't have a problem with indicators, but my challenges, I should say, and what I believe most retail traders' challenges, they don't know how the market works. And they think the market is defined by their indicators. Imagine if you actually understood what was going on here, what that might do for you. And it doesn't mean we don't take stops. I take them every day. It's okay. It's overhead and cost of production. I'm sure the casinos pay the gamblers every day too, right? It's overhead and cost of production. So mentally, we have to change how we relate to this. There is no business that doesn't pay bills. So when you take a stop, you experience it emotionally as something different. You don't experience it as cost of production and overhead. You experience it as a personal failure. You experience it as, oh, I didn't get approval. I'm not so smart. What goes through your head? You see, you should be writing all those quote feelings down. The self-talk is the lunatic under the hood. And you got to become conscious of that self-talk. It comes from a place that it has nothing to do with trading. It comes from fight and flight. It comes from your emotional states. It comes from the reptilian brain. Really. So you need to become familiar with it so you can interrupt it. It's never going to go away because it's like hardwired. So you need to learn that. You can learn that in Trader Lab, and you can also learn how to do this if you do the work. I mean, my personal belief, and it's just a belief, and I've got 45 years of doing this, is anybody can learn to trade if they come to Trader Lab. But there's a few prerequisites. You got to do the work. You have to accept you're going to go through a learning curve. You're going to need to leave most of your indicators behind because if you can remove what creates conflict and minimize your inputs, you have a clearer path for timely decision making because you have process versus randomness, ambiguity, and conflict. Might that help you? And if you're not sure about that, and it's not that you can't use indicators, it's that you learn to understand how the market works. Then you can take an indicator and overlay it on something like this if you know why we would get short here. If you don't know why this is a short, then you might want to take advantage of a Trader Lab, especially because there is no cost and it's a community of serious traders. I can tell you it's not romper room. It is, and it's not the Holy Grail. There is no such thing. It's an opportunity for you to actually learn what this business is. And maybe if you do the work and you can control yourself emotionally, maybe create a sustainable business. And it's not one trade. It's not even the last trade. It's all the trades. So that's all I can tell you about it. That's the Trader Lab, It's not complicated.
PS buyers at 5,955.5.
So let's watch what's happening. Remember, what is our issue in here? Stops are sitting here and we got our mid. So the behavior that often happens, retail traders are like, well, let me just, not to disparage any of us, but lemmings. They do the same thing. That's why most of them don't succeed. I know, now for me, the mid is here. And I understand that we can, and they're selling icebergs here. I understand we can get retail behavior at the mid. It's a common setup that retail traders use, and it works at times. Here's the other side of that. There's stops sitting here, Everybody knows it. You know it. I know it. So that's why if I take this trade, my first job is to get risk neutral. Because if I squeeze these guys out, which is possible, where's my next location? I already know where it is. And it's the same trade from a different location. That's called mean reversion. This is mean reversion with the caveat of the stop sitting here. So now we got to see what happens. The goal of the trade is to get here. That's mean reversion. So if the mean, the VHVN is too high, then here. If I squeeze the mid guys out because they got their stops here, I'm looking for then to sweep. I'm going to look for icebergs, and I'm going to look out here to fade it for a continuation trade, and it's not a recommendation to come back there. Why would I do that? Because I already know where my next trade is. Not like, oh, should I sell this? What do I do? Oh, there's the VWAP. Do I sell the VWAP? No, I don't. Because the stops are here. So do I want to join those stops? Where does this trade fail? Well, 3 ticks over here. So I have no risk at this point. So it's kind of like buying a ticket to ride. Now, let me go a little further. This is microstructure right here. Sellers took control. There's a test and a sweep. That's what sets that up. Okay? And I have a sweep here. That sets this up. So I have sweeps. This is a microstructure. There's going to be stops here and above there. That'll bring you back here. So here's your choices. And by the way, choices mean you have to vet a trade management process. This is too high. Stops can be there. Sellers are in control here. This is an entry. This is possibly trade management or an entry. All up to you. Me, I'm inclined for this, or higher, but minimum here, 1 tick under here, 3 ticks over there, and whatever that range is, that's my minimum, okay? If I can come inside here, if I read it and I have a chance, I can sell in here, but that takes a little more skill. So in Trader Lab, it's really more about market mechanics. So when you have the process and the structure and the location, all this stuff came together and the sweep, then your entry goes there, and you take your stop up here. So now we are coming back, and remember, outside edge is sitting here, and resistance is here. Let's see what it does. Are you guys tracking? Okay, let's watch. Nothing to do. Just manage your trade. Questions, please post them. Do I consider ETH structure? Yes, I do. CJ's asking this in YouTube. Thanks for the question. By the way, guys, if you're in YouTube and you're visiting Trader Lab, please give a like, smash the like button, and subscribe to the channel. Also, these streams and the library of webinar are available to all of you in the Bookmap Discord Trader Lab community. There's no cost for it. Remember, this is our resistance. High volume is here. Outside edge is there. Where are my next trades? And remember, where's the stops? Retail trader behavior. One of my least favorite things to do is do what they do, because, as you know, retail traders don't have sustainability. But I had a trigger and I had a location. If the mid was just sitting out here by itself, I wouldn't be trading it. I'd be looking for this. But this is a structured trade to come here. So it's going to fail, and that's okay because I'm going to scratch or I'm out subject to my trade management process. Now that's an individual specific conversation to the time frame you trade. So now I'm looking for this. And now I'm looking out here. These are not trade recommendations. Let me just look at the structure. I'm going to answer your question about the ETH in just a moment. Well, we have yesterday's low, and we have the overnight volume point of control. We have to be conscious of testing into yesterday's range. That's a possibility. And if we come out here, this is our outside edge there and here. So I'm going to be looking at a short. It's not a trade recommendation. It's just a trade. It's nothing more than a trade. And trades work or they don't, right? So what do we know? We know there's stops above the mid. If I'm using a trailing stop, and I often see selling ahead of these stops. So in theory, 3 ticks above here would be your stop. You would have a scale, you're risk neutral, or you have a trade management process. And again, I always say separate conversation. And you could be out of this. And the reason you might want to be out of it is because where's the stops? They're sitting here. So you have to vet that. That's part of what you do in TraderLab. That's why there's no 15-minute plug-and-play solution. And a lot of retail traders spend their development hopping from chat rooms and gurus and whatever, and they end up with a mess. And they're torn in conflict. I can assure you, if you come to TraderLab, you will be dazed and confused, but you can also sort it out and understand and learn. You can just go to TraderLab, use the link in the bottom of YouTube, and ask other traders in there, how long does it take for them? And don't forget, our senior trader, just so you know, we have new traders in TraderLab. Doesn't matter how long you've been doing this, and it doesn't matter you have questions. The whole point of having the TraderLab is that traders participate and interact with each other. We leverage the collective experience. Our senior trader has over 50 years. I've got 45. Both professionally and out here with you. And there's a lot, you can leverage that. And everyone else in TraderLab, everybody else in TraderLab, not everybody does, they all take pieces and they put together what speaks to them. What I do is very simple. I'm speaking a language. I'm reading and interpreting language based on what I see in the order flow and the auction. So I know this is an important level, and I know there's stops. If I get my stops, I can come out in here, and this is the next high volume area, microstructure, that was too high. I fell away from it. So the outside edge is here. That's why my next trade, I already know where it is. And it doesn't mean I mechanically step in front of it. It means I look now for a trigger. Does that make sense, guys? And as far as the ETH goes, yes, ETH is very important because it's the last auction. So I look at the ETH, I trade the ETH, and then when I come in the RTH, I already know the behavior of the participants in that auction, and I also know the levels that have statistical probabilities based on the ETH that are in play when the RTH opens. And one of them, well, a couple of them, will give you what? ETH high-low, over 90% probability. We could take one of them. And there's the ETH low. We took that one out. And then the overnight volume point of control, which is somewhere right up in here someplace. There it is. This has about an 80% probability. So I know we can come all the way up here. Okay? Which we didn't get to it. Remember, I was looking for a short up there off the open. I'm just giving you an idea. That level is still in play. However, to get there, we got to get out here and maybe up here. Test this. So I know my resistance is there, 71. Make a note of it. and then the outside edge of all of this. You see the taper here? In the auction, what this is telling us is even though the market was going up last time we were here, what happened? There's less volume. Think of this like you go to store Saturday night, you're going to watch the movie. And you're going to the local store. You're not going to the supermarket. And it's very expensive for the ice cream. But it's down the block. You don't want to go on a cross-country experience. So the volume tapered off, but the price is too high. Less buyers, higher price. Let's watch. Now we're getting a sweep, and we're still, remember, 3 ticks above here, which doesn't mean anything. And I do suspect, not expect, you won't hear me use that word, suspect that we're going to get these stops and maybe come up in here. This is the more optimal, if there is such a thing, location because it's outside in. This is still the trade. Now, if we keep pushing through, that sets up the overnight volume point of control. So it's that. So if this is too high, then that. If not, then squeeze. Then what? If I get a short, then there. Or not. Let's watch. Buy sweep, sellers, micro high volume. Notice where I am. My volume's moving a little higher, so I got to be very careful. This is not a trade I will take because of the stops at the mid, which is right there. So I have nothing to do, just touring. Because I can come here now. And I don't take the same trade twice, especially at the mid. Absolutely not. You might want to make a note of that. And then vet it. CJ, did I answer your question? Do I consider the delta? Yeah, I do actually, Juan. The delta, the way I look at delta is here. I don't look at delta down here because this is just showing me the delta that's on the chart. What's it say? It's going up. Okay. Well, what about this? Well, it went down there. Now it's going up here. I don't need to look at that. So I look at the delta here because what this is showing me is the aggressor. That's what delta is. And the delta is made up of stops. I'm getting a sweeps, and I'm coming to my outside edge. Let's see if we can read this. Micro high volume structure. I would really like to see this out here, but it's not my job. Micro high volume structure. We are above the mid. We got those stops out. Thanks for playing. Here's a sweep. Here's a sweep. I'm watching for the short, okay? Not saying it's any good. I'm just saying that's what I'm doing. Coming to an outside edge. And this is not a trade recommendation. This is what's hard about mean reversion is where's the outside, I know this is outside right there. Actually, I should move this down. See where that 282, this. Okay, hold on. So we're going to look over here, and we're just going to see if anything shows up. We'll just take a look. Not a recommendation. We have a single at 71. 71 is important. This area here, this low volume. So this is where I'm looking for it to test, and then I'm looking for a short. So I've got buyers. There's my low volume node, outside edge. Now I'm going to look to see if I get a selling structure. And if I don't, I have nothing to do. If it keeps going, then I don't have a trade. Okay, I don't call trades. I'm just a tourist. Are you guys tracking? Now, again, not a trade recommendation, but what did I do? It's not the outcome of the trade. It's what did I do? I anticipated the trade. I waited for the location. And long before we ever got here, I told you about the trade. Because I had two trades, to short off the mid, the squeeze of the stops, and then the potential to short this. And there's two possibilities always, right? We can come back down because we'll mean revert, or we're going to continue higher and the trade's going to fail. That's as deep as this gets. There's nothing more to this. And if the trade fails, then the stop would be 3 ticks over here. So you're looking at 75, 72 half. So you'd be short a stop at 72 half, say Laguerre, right? And then your job is to try to get risk neutral before it gets to your stop. That is trading. Let's see what happens. And again, not trade recommendations, guys. The whole thing with, I believe, for trading is that you know where your trades, this is what a trade plan is. You know where your trades will show up, and you certainly don't know what's going to happen. So just like the casinos, they don't know what's going to happen anytime, they deal the cards. So we don't know what's going to happen either. So what we need to be doing is only trading where we have a plan and where we're attempting to get in alignment with what might be the context. Now, the thing with context is it's continually evolving and changing. So if we take trades, then what we need to be doing is trying to align with what we perceive to be the current context. And then either the trade's going to work or at least get your risk neutral or you're going to get taken out. That's it. Nothing more to it. So this thing looks like the buyer, there's more aggressive buyers here. So it looks like the trade may fail. Let's see what it does. Yep. That trade failed. That trade's done. Do I consider gamma? No, I don't. I don't bother with that. Too many inputs, and as far as how I trade, it just doesn't. It's not material to me, so no, I don't do anything with it. So that trade failed. That's a stop. Now we're out here. We have to see the behavior out here, but we are pushing outside of this outside edge. So we've got to see the behavior. But now, if we keep moving up, it sets up coming back to yesterday's low and maybe the overnight volume point of control. So I put a trade on. If I take a stop, that's that. And I have no problem with this. That's okay. Have to be okay with it. That's trading. So now I don't have another trade at the moment. And I don't want to necessarily be doing this. Now I'm still at an outside edge. But this is very difficult because what you're trying to do is see if there's absorption and what happens like right here. Are we going to revert from here? Well, it's a long way to go, but it can do it. So we'll see. One of the things that happens in mean reversion trading is what's difficult about it is trying to get an outside edge. That is the dilemma. So I find for me, if I'm trying to get outside in this kind of configuration, I can't tell. I mean, why not sell this? Why not sell this? Why not sell this? How many trades do you want to take? Which is the right one? Notice we have structure here, you see? And there was some pretty good selling right there. These guys were absorbed. So the outside edge is now here. High volume is there. So, and this could still come down. It's still a potential short. You just have to decide if you're going to trade mean reversion, whether or not you can have an edge with it, because it's very easy to get trapped. Like to try to sell this. All you're doing is if it's actually going to go higher, which we don't know, you're getting in these counter rotations, and then you're going to get squeezed out. And that's why, that's how you take a stop. Outside edges here. So you want to see if we come up here what the behavior is. And this might be it already, so we'll see. We're below this. High volume is there. It's a potential short. Now, the entry would be over here. So in theory, unless you got short here, you don't have a way in. You have to have extremely timely entries for the risk management and to get risk neutral. And this takes a lot of practice and drills. You see where it broke away here? The buyers are here. The sellers are here. That was absorption. When you break low, that's a trigger. This is where you put your order, one tick below here. Now, if you put it, and if you didn't get it in here in time, then you'd just be hanging out, unless you determined you want to get short here. But the trade still is going to fail up here. Or the minimum place I would have a stop is above this, the high volume. That's like using a shoehorn, because the market could come back in here and test the sellers over there. Mean reversion, the joke in Trader Lab is, yeah, it's mean, because you'll end up with this kind of stuff. Stops, scales, stops, and eventually, assuming things haven't changed and we're going to continue squeezing, we're still looking for that. And again, it might not, we might just continue squeezing. So let's see what it does. This is trading. I can't make it any better. Yeah, RP, yeah. Trying to trade mean reversion is Is short the trend? Well, first, it's a time frame function. For me, I'm short. This is a short. I take this trade. I don't have a problem with it. Just because there's a wick, it's time frame. I trade rotations. So for me, 10, 15, 20-point rotations, I do that all day. Even if the trend is up, theoretically. But for me, the trend is not up in the way I trade. For me, I'm trading outside in. So I'm trading mean reversion. Now, if I keep getting taken out of these, or the VPOC shifts higher, like back here, then maybe not so much. So the trend might be up for you, but it's not up for me. See, guys, when we talk about trade plans, which is really a focus in Trader Lab, the business of trading, one trader's long is somebody else's opportunity to get short. We have traders who will trade both sides of the market. In other words, they'll trade in their time frame. The trend might actually be up. In my time frame, or the fractals I trade, the trend is down. Now, who's right? How about the edge? Because it doesn't matter. So I know now, if I had a short here, that I've got to get risk neutral. This is why order flow is such an important asset to manage and to, I should say, take advantage of. Because if I can get short here or here, by the time I'm conscious, I might just hit it here. My stop's still going to go up here. And then I'd be risk neutral. I cover my risk. And then I have my stop sitting up here or here. Let's see what it does. So first, isn't that an interesting question? Well, DEUT, your VWAP is below my mid. Well, okay. My VWAP is at 98. This is a full session VWAP. So I don't know if you're which one you're referring to. Alan, there you are. I was referencing your work on trailing stops. I appreciate that. And other traders in Trader Lab, you should be participating in that. Alan, post the link that where you've been putting that data together so everybody can contribute to it, and then we can all kind of come to some conclusions for trade management processes. It's all time frame and fractal related. So this trade, if you took it, you would be risk neutral, and either it's going to keep squeezing or not. Whatever it does, it does. I mean, the rotation is up at the moment. We might continue squeezing. No reason not to. And it doesn't matter. You really, when it comes to trading, I have found that as long as I follow a plan and I understand that my job's to get risk neutral, then you really have to go, oh, this is interesting. What's going to happen? Because that's the best you got. So let's see what happens with this. So I can tell you now that if this gets taken out and I'm pushing outside, then I'm not going to have any more shorts. That I'm just going to then go to the sidelines. I do not have a long. I would just go into the garage, park the car, and just wait. Let's come back to where our resistance is. It's right up here. So is this trade going to fail? I can't answer the question. I'm going to say probably. Because we couldn't get back here. So yeah, the trade is going to fail. It's going to scratch. I didn't do it yet, but it looks like it's going to do it. 3 ticks above here. So this trade looks like it's going away. Where is 3 ticks? $74. Where's our stop? I think we get stopped. We get stopped out on this one, guys. What's this high? 3 ticks over. Let me just try to see if we did it or not. 73.75, 74 half. I think so, huh? That was the high. Yeah, you'd be stopped on this trade. But you would scratch, so you'd scratch. So for me, hanging out. Because what's happening is, even though we're counter rotating, we are making higher highs and higher lows. So that puts me just on the side. It wouldn't do anything more than that for me. Because my sense of this is that we're still have a chance to come down, but I'm not going to take more trades. Part of my plan is if I'm taking mean reversion and I get stuffed once or twice, twice, let's say with the same ideas, because I had 2 locations, remember, 2 locations for a trade. and one was out in here, right? And then this one is also doable, but I'm finding my buyers, you see. So I'm seeing a lot more green buyers than I am sellers. So, and this is still resistance, but I'm done with the shorts now, and I'm not taking longs. I'm still going to be looking for the squeeze, and I'm only talking about me. It doesn't mean the market won't go up 30 points from here. That has nothing to do with it. It just has to do with a way that you as an individual trader can relate to the market. Anyway, there isn't one way to trade. There isn't even a right way to trade. What you need is a consistent process that has a statistical edge. You're going to take stops. We all do. You're going to get out of alignment. I'm not a scalper, so I try to go for larger rotations. So if I take a full stop, if I don't get scaled and I take a full stop, that's okay because I'm going for larger rotations. So when I catch the rotations, they do well because I'm trading this. So if I take a probe of a market and take a full stop, it's a few $100. You know, it's not even. It's like 3 points a contract. That's not much in the scheme of this, especially if I'm going like for mid or down the VWAP. So it pays. But along the way, I'm going to take stops, same as the casinos pay gamblers. So, but it all works out. But that's why I figured out that if I'm going to put a trade on and I'm going to risk, let's say 3 points, I got to make something for the risk. So I have to wait for locations that give me something that makes it worthwhile. So I don't trade as actively as I once did. I trade actually much less actively because I'm not here. I'm here for the edge and the reward. So if I can wait for locations that have outsized potential over time, that takes care of the stops and it, puts pizza on the table. Does that make sense? Do we have any final questions? I got about 3 minutes. By the way, please give a like, hit the like button. It'd be very nice if you would do that. If you're interested in Trader Lab, there's a link in the bottom of YouTube. You can visit the Bookmap Discard Trader Lab community. Download the 60 PDFs that I share of structured trades. And there's a library of webinars. The structured trades look like this. I'm not a vendor. There's no course. These are just things that traders asked me a long time ago. What are you doing? I threw some of these together. Also, I did work with Bookmap developers. This is many years ago. So I was trying to create things to help traders understand order flow better. And some of them now are integrated into the actual add-ons that we have. This is what the Trader Lab looks like. A lot of posting going on, a lot going on in here, a lot of charts, a lot of interaction. And you can use the link in the bottom of YouTube if you're interested in it. I believe this Trader Lab is something that will potentially change how you look at the market and experience it, and maybe even how you operate in it. And as long as it's still no cost, you might want to think about it very seriously. This is a library of webinars. Start with the first one. It's a primer webinar. It's an overview, and it's got about 31,000 views. It's a good place to start. And then there's why most traders using indicators fail. Trapped in Trader Groundhog Day. I always like to reference that one. That's when you work hard, wake up, doing the same thing, think you got it now, and then you end up back at the same place. Trader Groundhog Day. It affects all of us because the market is random and we think it's just really, tweak, make it better, curve fit, and that somehow the market will fit in a box. Well, the market is continually auctioning which means it's changing its rotational behavior in all time frames or fractals. In my opinion, you need to understand how the market works. It's really a foreign language. I don't use indicators. I had to learn to speak a language, and it's very much either a foreign language or like playing a musical instrument. Once you understand how to do that at a competent unconscious level, you can then be active, and you can interact with the participants on a more timely basis using order flow. Please give a like on the way out. Remember, these streams are available to Bookmap Discord Trader Lab participants to screenshot, reverse engineer. Also, remember, you should be recording your narration using OBS software so you could narrate and see what you think you're seeing and then go back and see what actually happens in the market. That's how you educate yourself. Learning the trade is not a sprint or even a marathon. It is a deliberate process. And if you build it out like a process or a business model, you will then know what you're going to do, where you're going to do it, and then you're going to accept the random distribution of outcomes, just like casinos do in the gaming business. If you're interested in that, use the link in the bottom of YouTube, and I look forward to meeting you personally in the Trader Lab. Don't forget to hit the like on the way out, and thanks for visiting Trader Lab today.